Good morning, everybody. It's Thursday, September 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to them during the show. Overnight markets here, December corn down 3/4, 414 and a half. November soybeans were up 5 3/4 at 10.59, and December Chicago wheat was up 5.5 at 5.94 3/4. This morning's export sales were out. Corn 535,000 for corn. That was below the low end of the estimates. So disappointing there for corn. Soybeans were solid, 1,574,700. Wheat was below the low end of the range, 158,900. Meal sales were kind of lower end of the range as well, 279,900. We did have an export sales announcement this morning, 115,000 metric tons of corn to Mexico for 24. Good morning, guys. Looking at overnight news, I would say kind of the highlight would be that, potentially more stimulus out of China this time with the bank infusion. Certainly got the equity markets going pretty good. Soybeans, were higher as we closed out the morning or overnight session, I should say. So with that, Dustin, maybe a few thoughts to get us rolling here this morning, and then we'll kick it around the room.
Yeah, thanks, Dan. I think, Chinese demand has been, in question for a while. And, anytime we see this large of a stimulus package and they're willing to throw the kitchen sink at it, definitely going to help probably beans over corn. Just they've been, that's one product we can count on them for. We've also seen really good crush margins lately as well. I think that the demand prospects for beans, when you weigh that against, an excessive carryout that's still expected to come, you still have to have buyers and sellers that match up at an adequate price. There's still pretty high demand for domestic crush. And, there's still, the global need for beans to move as well. We got some pretty good export sales this morning, so we're still capable of seeing, solid export demand despite this. Big questions coming up is going to be like, what does the river situation look like here at the end of October going into November? We still have had some fairly wide spreads, even though they've narrowed a bit for beans. And we're coming up against some key technical numbers. We get to that, 100-day moving average, some major retracements, and, growers start to look at, raising cash off the combine. Beans start to look fairly attractive. So I still think that we've got a long way to go to say that this is definitely going to be in a bull market for beans just because of Chinese stimulus, but it certainly helps in an overnight situation.
Well, it's incredible to see. I mean, you're over $1 off of the August lows for November beans, and so if you're one of those growers that's in the process of harvesting, whether it's a record or a very solid crop, I mean, talk about a windfall that 6 to 8 weeks ago everybody wasn't really talking too much about, right? Justin, I think you made that point yesterday.
Yeah, I mean, you're getting new crop beans over $11 overnight, so compared to where the nearby contract was, a month or so ago, you're $1.70 higher than that. So if you factor in the carry and you factor in the kind of flat price rally we've had, the fact that we're still getting really good yields, it's giving the opportunity for a lot of growers to be in a much better spot than they were not too long ago. So yeah, of course it can go higher. I think building premium in, we're making some good technical trades, so you're getting fun short covering. You see it last 2 days, especially kind of put beans quite a bit lower, and they come back and buy it, close it higher. So definitely some good momentum to the upside. Like Dustin said, we're getting some pretty big areas where you probably got to be taking a good look at it if you're way behind on sales, looking at new crop stuff. So yeah, I won't say it's a gift, but it is a gift. Whether it keeps going or not is to be determined, but much better position than we were in, 45 days ago for sure.
Justin, you think some of this price action too? I mean, that potentially some of the later, or the beans in August, we started with that dry period that made it nipped them, but yet corn was made or didn't get it nipped is
Yeah, I
bad.
think it was a bad finish in my opinion either way, from what could have been. We're still hearing really solid corn yields in the majority of the regions that we work with clients. Some disappointing here and there, or some that have trailed off from the really, really good early yields. I would say beans probably more consistently a little disappointing. Still really good yields, but not over the top records by any mean. I would say a lot, even in Illinois, some of the better areas are, 5-10 bushels below record on a decent amount of acres. So, that's part of why we're rallying too. I think there's a little nervousness on what that actual final yield is going to be. And I don't, there's so many acres out there. It's so hard to know the national, but the trend I would say so far isn't overwhelmingly higher than the current government numbers by any means. And you could argue it could come down a little bit. Question is on beans, is going to be South America. They're such a big part of it. Global stocks are still really high in beans. And even to get our carryouts where we have a big buffer, which we've talked about. There's a huge demand increase written down in order to keep us, under a 600 carryout. So we have some good wiggle room in beans on yields, unless they're 5 bushels lower than the government or something like that before it would get interesting. So it's a lot to kind of think through here, but I do think, you are going to start running into more and more harvest pressure at these kind of price levels. You might be willing to store it at $9 and take some chances, but you're starting to get where you guys could be profitable here.
Sure. It was another story overnight. Reuters was reporting, actually it was yesterday afternoon, that the drought has caused some transportation halts of grain through, I'll say it wrong, the Madeira River, an important channel that links Mato Grosso with the ports. So, starting to see some difficulties with waterways over there, just like we are with Mississippi over here. So something to certainly keep an eye on as we talk about grain movement. It's 43% of corn exports and 34% of bean exports go through that channel. So, for what it's worth.
Yeah, it's kind of a little reminiscent of last year where we had kind of both problems happening. I mean, what we're seeing here in our river system, happened last year. It made it really challenging for spreads and to be competitive because of just the extra cost of, barge freight going up and not being able to load full barges and all those kinds of things. So if we get a little temporary bump with this hurricane coming through, Dust made the point, it goes right back down afterwards because it's just a temporary blip there. So yeah, it could just raise the cost of shipping, both from South America and US. It's unfortunate. If our river systems were full and barge freights were cheap, we'd probably be doing a lot more export business right now with when things like that happen.
Right. Ben, what's on your mind this morning?
I think early stages of harvest, there should be plenty of space out there to begin harvest. Talking to some commercial partners this morning, they're getting slammed right now. Typically, if everyone has a different logistics plan, but you would apply to contract first, space is fine. But looking at the weather, we have a phenomenal window. There's going to be some scattered showers in the east, wide open in the west. I think that the latter half of harvest, maybe 5 to 7 days out, we might start to feel, we talked about before, 10 days, 12 days, you start getting plugged up. If things are coming in well, we might start to see a little bit of drag on these markets there. We're going with the technical momentum today, but I do think that with the low river levels, not a ton on the books for export for corn yet, that we fill up space. And then we're looking at a little bit of a different beast here, potentially for the last half of October, maybe the last 2/3. I think that with quarterly stocks, we're going to have to see something, and we're going to have to see some sort of a verification of reduction in yields, or we're sitting on our hands looking at filling up, not being able to export to the degree that we should be able to, and a whole another 40 to 50% of harvest to come. And those are the bushels that most likely don't have hedges attached to them, and people have to make a decision. So I think we're in kind of a tight space here where we're going to find out how much the technical buying that we've seen and covering can continue to hold these markets up.
Yeah, I do want to add one thing to that. I think just as I'll call it a fundamental, but crop insurance, obviously the month of October is when we determine the harvest price there. And a lot of growers, I think, leaned really heavily on crop insurance this year as their marketing plan. A lot of, high coverage levels, a lot of the reason because we didn't get to much higher prices after, I think that the highs of the year were the, first trading day of the year. So a lot of heavily leaning on crop insurance as kind of their floor. We saw this last year. It's not uncommon. So we've kind of rallied into that. We're call it by the 15th of October when you're halfway through pricing, that floor's mostly gone. It's deteriorating quickly. And, we saw where we got through crop insurance last year and a lot of people still just didn't sell afterwards. And that floor was gone and we had a pretty big break. So I think timing wise to keep that, between now and mid-October, just realizing that floor protection's disappearing every day starting in October. So that could naturally push more selling to the market during that time frame as well.
Well, very good. Anything else to add here, guys, on the grain side before we? Yeah,
I was just going to add, Dan. The latest Euro model for South America came out this morning. 6 to 10 still dry. Mid 90s through Brazil. 11 to 15 is trying to bring it north central. But is 11 to 15 out there, so something to keep an eye on. But I think that's why you're also getting a little bit of a pop here too in the beans lately.
No doubt. Thanks for that update there, Bri.
Yep.
Ryland, happy birthday, buddy.
Oh, thank you.
Happy birthday, buddy.
Appreciate it.
We a sharp loss yesterday in the choice cutout. Wasn't real friendly for meats, and then we got hogs and pigs today. I think at 2:00. So what are your thoughts?
Yeah, well, trade just looked a little quiet yesterday, pretty much in both places. You got the cattle market just waiting to see if Packers are really going to pay up for cash or not. And I think that kind of lower beef quote may have just soured some expectation, but we'll see. You just never really know if they're going to come after them or not. It seemed like bids were around 180 and asking price around 185. So we'll see if that starts to pick up. Sound like there's some light trade. It's setting money in Iowa, but definitely not setting any trend right there. So keeping an eye on the beef right now. It just seems like that's likely to continue to erode. And we've got cash prices pretty much in line with where they were at the same time last year. So I think just even though past performance isn't indicative of future results, I think people are hoping that it kind of goes in a familiar direction. So we'll see about that. But yes, we got the hog and pig report today. Trade was pretty quiet yesterday overall, just kind of mixed bag. It's been a really good trend though. It's been really just kind of surging lately. So I think there's a lot of optimism just kind of down the road. So we'll see what they say, but the market's expecting all hogs and pigs at 100.4, the Kepler breeding at 97.9 and market hogs at 100.7. So there's going to be a lot to talk about, I think, after the report overall, but I just think the narrative of that lower breeding herd number is really kind of leading a lot of the outside spec money to stay pretty friendly alongside of any kind of stimulus on the Chinese side of the market. So exports weren't anything really to write home about in either place. So I think just, that's really what the focus is going to be, probably just some caution before the report today.
All right, very good. A couple of administrative items. We've got Jack will be in tomorrow to wrap up the week, so that's always interesting. It should be fun. He'll also be bringing Fun Fact Friday, so kind of a dual purpose Jack tomorrow. So tune in because you don't know what you'll get there. We appreciate everybody that tunes in on a daily basis. We'd appreciate it if you give us a like or subscribe. Certainly helps us out. We'll keep you up to speed on everything AgYield. So thanks again to everybody that supports the show and watches us every day. We enjoy doing it and putting it on. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Like I said, Jack will be in tomorrow. Hope everybody has a great weekend, and we'll be back on Monday. So have a good weekend. Have a safe harvest, and thanks again for tuning in.
Thank you.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.